Hello, everyone. My name is Eddie Lee. I am a partner at Whitestar Capital. Whitestar Capital is an early stage venture capital firm that invests in North America, Europe, and Asia. For us, what that really means is that we're active investors with a local footprint in markets like the US, Canada, London, Paris, soon Berlin, as well as parts of Asia, including Tokyo, Hong Kong, and Singapore. Traditionally, we are a lead or co-lead type investor at Series A and Series B, and we are sector generalists, meaning that we invest in and partner with founders across all spectrums of consumer and enterprise businesses across the world. Many people in Korea will equate still Silicon Valley and California as the venture hub of the world. And to a large extent, that's very true. However, I will also point out the fact that there are now a lot of much larger emerging ecosystems, global startup hubs, if you will, outside of Silicon Valley as well. And New York is a big part of that story. New York has historically been the second largest venture market in the world, followed only by Silicon Valley and perhaps mainland China at this stage. New York has historically been a very strong center for enterprise SaaS businesses because of the clustering of Fortune 500, Fortune 1000 companies that are largely HQ'd in New York across industries like finance, fashion, marketing, and many other industries in between. Taking advantage of this really rich ecosystem outside of technology, New York has been able to build a phenomenal ecosystem of early growth, late stage investors in technology, as well as an incredible lineup of technology startups and founders who are now migrating over from traditional non-technology industries into the startup ecosystem itself. So we've been seeing this since 2014. We've been part of this exciting journey locally, and some of the biggest trends that I think are driving the venture narrative in New York are still incredible fintech enterprise stories with companies like Ramp that just did a very big Series B or Series C round, as well as a lot of the developments we're seeing in Web3, crypto, and digital assets that's really burgeoning in New York as a core hub in the US as well. There are a few important factors that we like to look at before making an investment decision. Of course, we start with the capacity and the ability for the management team and the founders to really execute on their vision. We also look at how big that vision is from an exit potential as well. What are some of the market trends that we can look at to educate ourselves on? How can we assess and proxy the outcome size as well? Whether this is an IPO exit or an acquisition exit down the road, how can we have a better idea of, depending on how much capital is invested at Series A or Series B, how much can we expect to return back to our limited partners, the capital investors into our funds at the end of this journey as well. An important part of this assessment is also having a better understanding of the competitive dynamics. So really thinking hard about who are the direct and indirect competitors to this certain business model, and how will this evolve over time as well. Once we have a pretty solid understanding of the competitive dynamics around a particular business, then we really dive deep into the execution potential by looking at more detailed information like the financials, the projections, the unit economics, the cohort performance for direct-to-consumer businesses, everything else in between. That really is a standardized metric at this point, even for early stage investing. There are many mental tools and frameworks that can help align the language of assessing a business between investors and founders. And so at the end of all this process, usually what we really look for is the founder's ability to have a productive discussion with us as investors and partners at the end of the day. I think the common thread that we often see with very compelling founders is the fact that they've been able to build a high-performing organization in the past. They were able to scale these organizations from, let's say, 5 to 10 people up to 100 people plus. And these type of skill sets are really hard to learn just by reading a book or attending a really great school. So these are some of the elements that we do take note of, and we do tend to emphasize when we look at new relationships with new founders as well. For Korean-related investments, we have partnered with companies like Spatial, which is a metaverse company based in New York. We've also partnered with Haimedi, which is a digital health company based in Korea, as well as Swing, which we recently partnered with. Swing is a micromobility operator that operates in Korea and now Japan as well. Generally speaking, when we interact with Korean founders, Korean startups, I oftentimes feel like Korean founders have an incredible story, a story that really resonates very strongly about their product vision, why they personally believe in the necessity of a product or a business that they deliver to the market. A lot of times, I also feel like there are tremendous opportunities for these founders to double click and dive deeper into the actual business behind the service or product as well. Oftentimes, commercialization is truly the key metric. The ability to commercialize and execute on that commercialization is the key ability that we like to see as early stage investors in Series A and Series B. And when we assess the topic of commercialization and execution, like I mentioned earlier, there are, standardized mental models and frameworks that everyone relies on when we parse through data, information, make sense out of data as well. I feel like many times when we interact with Korean founders, this commercialization and execution piece is oftentimes lacking in detail, especially on the pitch decks, as well as when we have an open-ended conversation after the pitch is over. So to me, it doesn't mean that the Korean founders don't know about these topics. I think they definitely do. Oftentimes, when I have follow-up questions, we end up having a really productive conversation around these topics. It's just that Korean founders, in my humble opinion, don't have as much experience being challenged or asked or have experience collaborating with other investors around these topics as much in as much detail. So going forward, I think this is just one of the many great opportunities for Korean founders to really flesh out a bit more detail around their business and how monetization happens, how businesses reach profitability ultimately, and really convey that message effectively to the investors around them as well. I think at a high level and very conceptually is really effectively leveraging data, operational data, to make management decisions. And oftentimes, it's easy to disregard data-driven decision-making capabilities and almost push that away until every company becomes very mature, post-unicorn status, if you will. However, the truth is that every successful unicorn business, every startup that becomes ultimately a unicorn and larger, start and develop these data-driven decision-making muscles very early on, from the get-go, from the beginning of the company's journey. It really starts with the founders being able to think about what data can be captured about the market, about the competition, about the external environment to the company, alongside all the internal and operating data that can be captured about his or her business, his or her company, the way they acquire customers or users, and how long these users stick with a given product or service. How is this monetized? At what margin? And so, what is the unit economic for rolling out certain business models or certain product features? These are all data-driven decision-making gating points for all of our portfolio companies. And for companies that lack these muscles at the time of our investment, these are one of the areas where we work very closely with the portfolio companies to ensure that they can develop these capabilities going into the future. Some of the common challenges that many startups will face as they become larger organizations, as they become more mature organizations that we have to think through very often as investors are matters related to culture, organizational culture. So from our experience, it's a very different story for a early stage Series A, Series B startup to go from 25, 50 person large company to now scale up to an organization that has 100 people, 200 people, 300 people large, and even beyond that. Oftentimes, the reason why culture is so important to these still fast growing, hyper growth stage companies is because culture is the organizational blueprint. That is the unspoken code for how every employee across the organization makes decisions in a very decentralized way, as much as possible, right? So the culture itself is really defined at the top level by the founders, the co-founders, and the executive level that sets the culture by example of his or her actions. The rest of the organization witnesses how the management team and the co-founders operate under different circumstances of the business, and they mirror that, they replicate that. The ability for the founders of startups at this stage to effectively delegate a big portion of operating responsibilities to the rest of the executive team first, and then also have those executive leaders further delegate important tasks to the rest of the organization is a very big learning curve, especially for first-time founders. And it's a very difficult task to take on effectively when you're scaling for the first time, again, from a 100-person employee mark to 100-person plus. So I think this is one of the most common pain points, growing pain points that all companies will face. And this is something that we need to be aware of as active partners as well, and something that we spend a lot of time with founders and CEOs, helping them navigate through this journey. The global economy is becoming much more unstable compared to the boom market that we were seeing in 2021. So the number one advice that we can provide to our founders is that we need to be a bit more prudent about how cash is used within the business. Protecting cash runway is going to be extremely important, just like it was at the onset of the coronavirus when the global economy was extremely uncertain yet again. So being able to protect that cash runway and to still effectively leverage that cash to achieve growth, to achieve product development, to get the company to the next level of a growth story, I think is going to be an important story for the rest of this year. I've always been inspired by the grit and the relentless pursuit of the South Korean people for excellence, to achieve their dreams and really pursue their dreams in a very wholehearted manner. This story resonates to me because this is the same approach that all the founders creating enduring technology companies adopt on a day-to-day basis. I want to leave this interview by saying to the Korean founders out there in South Korea, this has been what drove South Korea to where it is today, and this will continue to be the driver of South Korea's economic future because the relentless South Korean founders drive this future with their grit and with their willpower by not giving up and creating what other people will think is impossible. Don't let that sway you otherwise. Keep building what you're building today. And thank you for doing that.